WeWork has filed bankruptcy. Once valued at $47 billion, they were the poster child in the startup community. Many companies wanted to emulate what they built. Is this a falling domino towards a greater recession, or was this inevitable? Let's get into it.
Well, this is CPA Mindset, helping you learn and think like a CPA.
Let's get it.
WeWork, which provide co-working spaces, filed Chapter 11 bankruptcy recently. Their business model essentially is to buy property, office buildings specifically, from property owners at one price and lease it to its clients at a higher price. They was once valued at $47 billion. The bankruptcy was a major blow to the company valuation. Now they're valued at $44 million. In the press release, WeWork said 92 of its secured debt holders had agreed to a restructuring plan that will wipe out about $3 billion of its debt. So WeWork filed Chapter 11 bankruptcy. However, when most people think about bankruptcy, they think about Chapter 7. Chapter 7 bankruptcy is the full liquidation. The company's going out of business, it's over, shut down everything, no more operations. Well, Chapter 11 is more of a reorganization, more of a restructure their current debt obligations to an agreement in order to continue operations. As part of its reorganization, the company will cut down on its commercial office leases. Now, this particular strategy is in their best interest. Post-pandemic, a company like WeWork, whose business model is to lease office spaces to companies and entrepreneurs, now that many companies have moved over to a hybrid model, downsized, moving away from the big corporate environment, 2 days at home, 3 days in the office, or vice versa, and is filing with the New Jersey Bankruptcy Court, WeWork disclosed it holds about $15 billion in assets and $18.6 billion in debts. If WeWork has $15 billion in assets and $18.6 billion in liabilities, they owe more than they possibly have. Now let's go back to my initial question. Is this a falling domino into a greater recession, or is this inevitable? Now let's take a look at their financials. It will provide a clearer picture. Now, if you're not familiar with pulling financial information from public traded companies, there are two major ways you can pull this information. You can actually go to the Securities and Exchange Commission. This is where many public traded companies are required to submit financial information. In the blue header, you see filings, and then you can go to company filing search. Going here, if you know the ticker symbol in their stock exchange, you can use that, or you can provide the name. Once you start typing in, it tries to guess what company you're talking about. In this case, I typed in Apple. Let's take a look. So when you search for the company, you can get a lot of information. For Apple, they filed on November 3rd. They filed a 10K, which is their annual report. 10K is for annual reports. 10Qs are quarterly reports. Not only you can see latest filings, you can see if you want to look for a particular filing, a proxy statement, maybe not this year's 10K, maybe you want to look at prior year's 10K. All of this information can be in the Edgar database. And now this is for any type of public traded company. Now, you can also go to the actual company's website. Most public traded companies, if you go into the footer of their website, if it's not in the top menu, there will be an investors relations section where you're able to see a lot of their annual reports and their company filings. You can separate it by year. You can see what type of filing they have. It's a pretty unique way to pull information. Now let's dive deeper into WeWork's financial situation. So this form right here is the 10Q. This is the latest quarterly report WeWork has submitted. This is for the period ending in June 30th. Now, if you ever are not sure which report you're referring to, they always will have the information on the report where you can see. This particular report says for 3 to 6 months ended June 30th, 2023. Now, most financial reports will have multiple periods for comparative purposes. So not only do you get the past 3 months, you also get the past 6 months as well. Now let's jump to their balance sheet. This is where you can see more detail about their assets and their liabilities. Now the balance sheet is broken up into 3 major sections. There's the assets, the liabilities, as well as the equity. Essentially, it's an equation. Assets equals liabilities plus equity. When you look at this particular report, the video said that WeWork had $15 billion in assets. Now, if you look at this particular number, it looks like it's only 15,000. However, The way information is reported on financial reports is that they do it in a concise way. They usually condense it down to make it easy for the reader. The amounts are in millions. Now, because if you were to look at their cash amount, you'll probably say, I see why they filed bankruptcy. They only got $205. Well, actually, when you see that number, the fact that it's reported in millions, that means that they have $205 million. So the video mentioned that they have $15 billion in assets, which is what we see here, as well as $18.7 billion in liabilities. Now, understanding that the balance sheet is an equation, 15 for assets, and let's just round the liabilities to 19. 19 for liabilities. In order for this equation to work, that would mean that their equity is actually in the negative. Negative equity. That is completely alarming. That right there will be something that any investor that's following WeWork should be looking at. Negative equity, that's a red flag. Now let's look into the equity section to see if that's what we see. Exactly what we have here. Their total equity is negative $3.6 billion. Now, one more thing I want to point out when you're looking at the balance sheet is not only negative equity is a problem, there's a line on the equity section called accumulated deficit. If you look at that number there, negative $16.8 billion. Now, usually in the equity section, a company that's very profitable will have a retained earnings section. This is essentially the accumulation of profits over the existence of the business. When you see an accumulated deficit, that means this company has been suffering loss after loss, and this is an accumulation of the losses that they have suffered. Now, I want you to think about my initial question. Does this have anything to do with the recession, or was this inevitable? From what we saw by looking at their financials, you saw that their accumulated deficit was 16 billion plus, negative 16 billion plus. Their equity is negative. A lot of their business model is based on using office buildings. The pandemic came. Many companies are going to a remote or hybrid model. People are leaving the offices. They filed bankruptcy because their business model is flawed. The way that they currently was conducting business does not keep up with the new times. Now, they filed Chapter 11, so they're not going anywhere. They just have to pivot on their strategy to continue in operation. They'll be all right. Take care.